Hello, this is Itai Levitin at Forex Live looking at stocks to sell and selling Amazon soon if and when it gets to the area of $217. Right now it's just under 209, and I'll be looking for some moves. Perhaps even it will go down and then grinding its way up to that 217 US dollars area. I'm looking at these lines. Different algos will draw different lines. That's why we see the red and two gray ones. Some of them are ending here at the touch point on the weekly and daily, and they're all coming to this area between, let's say, 215 and 222. The Fibonacci uh, light lovers will also look at this Fibonacci, this low on August 5th, 2024, and then the 100% Fibonacci line on 3rd of July, 2024. And then we see there's the extensions of 1.272 at $214.62 and the 1.414 at 221.64. So my 217 is about in the middle of that. This blue is just an orientation because it also shows that if we do that, and my channel here starts with the open of this low after these earnings where we had a bit of a 20% drop or so. Let's see exactly from this high. Yeah, about 20 and about percent. And then it went back up about 20% from that low to this high over here. And that area is where we created the first touch point of this channel. So looking at this extended channel, we can also be creating, um, let's see what's happening here. Thank you very much. Okay, we can be creating another third point. There's one first point, two, second touch point. We can be creating a third touch point around that 217. So there's various reasons, technically, where profit takers may come in over here. That's why I've got this bear. And through this orientation, if it does play out, and we have the testing of the lower band of this channel, probably a bit of a bounce up and then crossing down that bear channel. If we later get to testing that gap, that pre-earnings gap at $181.87, and also this low, okay, then that would be, there's a lot of liquidity here. There's a lot of stops and market orders. So below that 180 mark, more or less, then it could be a nice buy. It would be a 17% correction from that high, and that would be an attractive buy, at least for a swing long, where you can mitigate risk, take some partial profits to mitigate risk if it continues to go down. But after 17% down, some people technically and fundamentally will probably find it attractive. Other than that, we may have the Trump effect fading out soon, perhaps until perhaps it'll be in 2 weeks. We're now November 11th, and it might be even by the end of January. Who knows? I think it's more towards the end of this month or at during the last month of the year. And also, we have Jeff Bezos, who has been selling a lot of Amazon stocks. None of these by themselves might not be the reason to start mitigating risk and selling some Amazon, but all of these together, I would be looking at that area to mitigate your risk by lowering your position size, the Amazon stockholders, and then look for more attractive prices. This is for intended for these investors and swing traders. If you're a believer in Amazon, you're long, you're not going to sell any, you're going to be looking at it, for the next 5 years, that's fine. this is not intended for you, and you might even profit more than all these swing attempts. But this is more for the medium term holders looking at stocks to sell Amazon soon. Might not get exactly 217, might be just a little bit above or a little bit below. That is the area. Those that are looking for this orientation might later want to look at smaller time frames to time your entries. But usually, when you're looking to mitigate risk, then you're not looking at a particular price just like a short seller would look, where it's very critical, the entries, but rather it's to prevent a case where you're sleeping on the stock. And later, if it gets to that 180, you're saying, hey, how come I slept through that nearly 20% drop? That's for you guys at your own risk. This is just an opinion. And do visit Forex Live for additional perspectives. Thank you.